Welcome, everybody. Today we're going to talk about support and resistance. And today I want to talk about how it's viewed in the retail world and the opposing view of how it's viewed in the institutional slash banking world. So let's start with the retail minded aspect of support. What is support to retail? Support is pretty much like a floor, right? You bounce a basketball on the floor, it bounces up. You bounce on the floor again, it bounces up. That is support. So I'm gonna draw it out for illustration purposes. Let's just say, since we're talking about trading, we see the market drive all the way down to this level, and it bounces from there. So that would be considered support. And when price goes back, we would expect another bounce from that same level. Each time price goes back, we're expecting price to be supported and bounce away from this particular level that I've drawn out. Now let's talk about resistance. Resistance is like the ceiling. If you throw a ball, if you're in the house right now, you throw a ball up in the sky, or you throw it up, it's gonna hit the roof and fall down. So with price, and the way we look at it through the markets is when price hits a level, it's a level where price cannot go through. It's struggling. It goes up there again, it hits it, and falls. Each time it goes there, we're expecting price to hit it and fall. That's resistance right there. Okay. So the way this is used in trading is that when price goes here, people tend to look for an opportunity to sell the market when it comes back to this level. Each time it comes back, we look for opportunity to sell. Another view to use this level is price can sometimes break above it, then come back to that level, and then resistance now turns to support, and we expect price to take off. So that's another way this resistance idea is used, where once price breaks above, we would expect price to find support at the top of this level and then take off. So we'll buy here, expect price to take off. The opposite will be set for support, where we could also expect when the market comes down here, when it comes back again, we would expect to buy. Each time it comes to this level, we expect to buy. And in the situation where it goes below it, or breaks below it, we would expect price to use for the support to now turn to resistance, and that price to drop. So we'll sell right here. So the first basis is once we find a level of support, this level, whenever price comes down to there, we buy. And if price does break below it, we can now expect this support to turn to resistance and a sell off. Same, and the opposite is said for resistance. Whenever price comes back to this level, we expect to sell. If price does break above it, then okay, I don't know what's wrong. Okay, there we go. If price breaks above it, then we will expect it to go higher, drop down, and then we can use it for a buy, and this resistance turns to support. All right. So now let's go on the chart so I can show you. Since I'm already on the pound versus the dollar, let's go ahead and do it. And this is the way I was taught to do this was I look at my charts, and where I see level of support, for example here, boom, price came here, bounced off, it also rejected, came here, bounced off. So this level will be significant because this level has acted as support and resistance in the past, and support, okay? So anytime price comes here, I'll be looking to buy, right? And if it's below it, I'll look to sell. Okay, another level will be, let's just say right here, this two levels right here, support, boom, boom. You know, so anytime price comes here, I would expect to buy. This level here can be also considered level of support. All right, price comes right there, it takes off, it comes back again, I expect to buy. All right, here will be considered support. This level right here. So I'm just drawing all the support I see on this chart. Support right here. All right. I mean, there's support all over the place on this chart. I mean, we can consider. Let's see where else I can put a support line. Maybe somewhere right here where price bounced off of this area twice. Now let's go for resistance. And I'm gonna put resistance in red. Resistance will be placed up here, right? Because this level, these two levels, significant, right? What about here? Boom, boom. Even on this side, you know, acted as resistance. Cool. We can draw one. Where else I want to draw one? Ignore that. Maybe we can draw one up here. I don't know if I use bodies or okay. Cool. Okay. Now you can quickly see how your charts get messy. Right? This is a problem with using support with the retail mindset. Your charts get messy. You have a bunch of lines, you know, all over the place. You don't know what line to buy from. So, I mean, I've outlined the blue lines, but like I told you, sometimes price can break below support, act as, for example here, break below support, act as resistance, or take a sell. Point is, there's too much going on with your chart. And this is the problem I have with it. One, it's very subjective. I mean, who's to say that everyone else is seeing the same exact levels I'm seeing? You know, like, okay, yes, we can both see these levels, but what about a level like this? You know, some traders might see it, might put it there, might not put it there. And then another thing is we're going all the way back in the past when price is all the way over here. And this is how I was taught, this is how most books teach it. Look in the past, see where price was supported, see where price, you know, bounced off of multiple times, and that's a significant level of price. Okay, that's cool looking in hindsight that you can see that. But my question is, how do you know that when price gets back to that same level, it's going to act the same way acting in the past? And we don't know. Let me use an example. So let's focus on support for a second, which is the blue lines, right? Okay, this level here, I drew this line here because this level here. Boom, double bottom. Some of y'all have heard of double bottoms, like teaching the books. Cool. So our expectation that anytime price comes here, we should buy, right? Price comes down right there. So if you were to buy right there, price you'd have lost. Yes, price ended up going higher, but it went way lower first. My question to you is, where would your stop loss be? Where would your entry be? We enter right at the line, and how large of a stop loss would be? Would you have? I mean, if you look at a 100 pip stop loss, and you wouldn't know it's going to go that low. You don't know how low it's going to go. So what gives you the confidence to buy here and the expectation that price will support it? I've seen too many traders talk about how the past pretty much can tell what the future is going to do. That's not really the case in trading. That's a flawed belief. Now, let's keep it going. What about here, right? Level of support. One, you see all this bouncing off of it. Bouncing off, bouncing off. And what did price do? Price came right here, bounced off, gave a trader hope that the market's going to go higher from here. And it went right down before then going higher again. So again, my question to you is, if you enter this trade, one, where would your stop loss be placed, and where are your targets? Those are the first two things you have to know when you put on the trade. Where are you going to exit the trade if you're wrong, and where is your target when you're profitable? And with a system like this, I just don't see how you can consistently have a certain amount of stop loss or a target, or to have confidence that historical price action will determine what future price action did. Right? Now let's keep it going. Where else can I use that support? Let's focus on. Let's see. Let's look at resistance. Let's look at resistance at this point. And I'm gonna turn this line right here to a resistance line, because clearly in the past we saw price bounce off, bounce off, bounce off. Now let's act like we didn't see what happened over here, right? Now there's another level of resistance. So I just want to show how this resistance and support thing can be very tricky, and how it's not the best way for you to enter trades. And I'm going to talk to you and tell you what ways you could use support and resistance to enter trades. Logically, there's other stuff you have to consider, and not just buying based off of historical patterns or historical price action. So for example, let's start with this. This is a level of resistance, right? Price goes up and doesn't even stop. It goes right through it. Then has a reversal, right? So if you had sold immediately when price got here, price would hit your stop loss. The market kept going straight and ran right through your stop loss. You wouldn't be able to make anything out of that trade, right? Now, cool. Price keeps going higher. You're looking here. Okay, cool. It's a level where I can sell because price has come like 3 times. 1, 2, 3. It definitely should come up here and sell. And this is the mindset I had. This is the mindset I know some traders still have when they're using support and resistance. They're buying at levels where price has touched a lot of times, in expectation that price is going to respect that level. Look what price does. It gives you the hope. I was respecting it, right? We see it resisting. It's not going higher. Price is holding on. Look what it does. It goes straight through. So again, if you were to enter this trade, what would your stop loss be, and where's your target? I mean, your stop loss is not going to be this high. You wouldn't do that. I mean, that's how many pips from entry point. Let's see. Almost 300 pips. No one's going to put a stop loss that high. It's a retail trader, right? And guess what? This level now could have been considered a level of support, right? We see prices bounce around this area. Expectation will be that when price gets there, it's going to bounce, right? It went right through it. So, point is, this support and resistance theory that most of us were indoctrinated into in the beginning of our trading careers does not work. I mean, it just doesn't. I mean, let's look at another chart for a second before I get into what I really want to talk about. But I want you to change your mindset on these things, because this was, you see support and resistance. It makes sense. It looks nice on your chart, a level where price reacted from, and you can expect another reaction in the future. It looks nice, but that doesn't totally hold up. And there's better ways to look at price. For example, I see this resistance level here. Boom. Price goes there. Yeah, you could look at a nice sell here. And price goes right above these levels before coming right back down. Guess what? Here could have been considered support, right? Why here? Because price bounced off over here, bounced off over here. So when price comes back, you expect those are going to bounce again, right? It goes right through it. So your logic is flawed, right? It doesn't make sense. Okay? And funny enough, I can put a line. I bet you this. I can put a line anywhere on my chart and it's gonna show as a level of support or resistance. Watch. I'm just drawing a line right here. I mean, look at that. Support, right? Support. We can go in that path support. Let me just draw a line anywhere. Look at it right here. Right? Look at this. Resistance. Alright? Resistance. I mean, if I can literally draw a line anywhere, let's draw a line right here. Let's see. I'm just drawing a line anywhere, and it shows that support. Okay, cool. Let's see. And I'm gonna change the line orange so we can see if it acted as support, resistance anywhere else in the past. Look at that. Resistance, right? Resistance. So, point I'm trying to make here, I can literally draw a line anywhere on my chart. Like, I'm just gonna drop this right here again. I'm literally not even trying to toggle it to any particular level, but let's see. Look at this. Support. Oh, resistance turns support. Support. You see what I'm saying? Like, I can literally draw a line anywhere on my chart, and it's gonna act as a level of support and resistance. So that doesn't benefit anybody. And this is how most of the books teach you. Some mentors still teach this nonsense of the idea of support and resistance. Find a logical level where price has respected in the past, or historically price bounces from those levels. And let's just say it's a support level. Whenever price gets there, buy from there. That's what we were taught. Right? But I'm showing you right now, I can draw a line anywhere on my chart, and it will show as a level of support or resistance. Look at this. I'm just throwing lines on here. Support. Do you get what I'm saying? Like, I'm just literally throwing lines. Look at this. I mean, support. So I'm throwing lines anywhere, and it's acting. It looks like, psychologically, it looks like, oh, these are levels where price turns away from or bounces from. That's a very flawed way to look at price. So, now let's talk about the institutional way of looking at price, right, when it comes to support and resistance. Now, the question I have is, who moves the market? Who owns the market? And the answer is the banks, central banks. They are the ones that have all the money, all the capital. They're the ones that choose what price the dollar should be, the euro should be. Everything is controlled. So, that being said, when you look at your charts and you see a level of support, and by the way, since the banks own the market, they have a lot of volume, a lot of size they need to move, which means they need to have a counterparty to their trades. So what they do is a level that traders will consider support. Let's say right here. Right, make it blue. The market gives people the false sense. Okay, check it out. The market rises from this level, goes all the way higher. Right? If you enter the trade here, where would your stop be? More than likely, you put your stop loss right there, at least. Because structure, market went higher, create another swing low, so you feel comfortable putting your stop there. That's a logical level. The banks, your broker, they don't know where your stops are. That's another thing that we'll talk about in a different lesson. They don't know where your stops are. But looking at the charts, you can tell where a trader will logically place their stops without even knowing where exactly you in particular put your stop. I would make the assumption that a lot of traders had their stop loss right here if one price is all the way up here, because it logically makes sense. But what does the market do? The banks take the market right below that level, go higher, right? Then they can have counterparty to their trades because they want to sell. So every buyer here is kicked out, and bank can be the counterparty to that trade and sell the market, right? That's just how it works. Now, over here is another level of support where you would expect the market to bounce away from.
What does the market do? What do the banks do? They give you a false sense of it bouncing up, right? And they take it right through. They essentially what they're doing is they're becoming counterparty to all these trades, all these levels where a trader looks at and says, "Oh, this is support. This is a double top, double bottom." That's where the banks are being counterparty to your trades. They don't know where your stops are, but it logically makes. You look at these charts, you can tell where traders would put their stops. For example, even up here, one can argue that this is resistance, right? Cool. One could argue this level is resistance, right? Maybe they put a stop loss above here. Market goes up here, they're selling, they're making some money. Cool. They have hope that, oh, this level is showing respect. This level is acting as resistance, like I've been taught in the books. Whenever it comes back here, I'm gonna sell it again. Market goes right here again, all right? Once it goes there again, it blasts right through. So if you sold here, you've lost. It comes back down. You're like, you know what? That was maybe you think, well, you know what? That was just a flaw. You know, this level over here should hold up price. Maybe I put my stop loss above here, or this was a fake out. The market goes right all the way up there to the highest point because some traders have the stop loss here. Maybe they didn't get tagged. Well, you'd have got tagged if you sold over here, you'd have got tagged regardless. But let's just say stop loss over here. The market took it all the way up there. And who do you think is selling here? It's the banks, right? They get up here and guess what they start doing? Selling because they were able to be counterparties to the people that were initially selling. They were correct on the market, but they knocked them out by hitting their stop loss and then taking counterparts of their trades, giving them liquidity to execute their large volume positions where market goes lower. Now look at market right here, all right? This is January 22nd. I will not be surprised. Logically, this would be the next level that more than likely they're going to take price all the way down to. Because guess what? I don't know whose stop is here. It might not be you. It could be a large hedge fund because they have more longer term models. And that's a lot of liquidity. If banks were able to take the price all the way down here and act as counterparts to their trades and take them out. So people will logically put their stop losses right here. They don't need to know it. They can tell by looking at the charts, all right? So do not be surprised. Just like over here, all right? Let's act like all this didn't happen. Cool. So this resistance, right? Check it out. Price is going higher, comes down. It's going higher again, all right? Comes down. So you expect logically that when price, look, I just went right through it, but logically, you expect that when price comes here, it should act as resistance and you sell. But look what they do. They take it right through, knock out anybody that has a stop loss here, and act as counterparts to their trades. So, point is, you don't want to use these levels as entries. You can. Now, don't get twisted. There's ways that you can use these levels as entries, but that is a deeper lesson, and that will require you to know some stuff like what is the current trend of the market, and having trade direction. And also you need to have different stuff in play, not just an engulfing candle that makes you enter the trade. Like there's different type of things that you can look at these levels. Maybe a breaking market structure. But don't just be a person that's trying to catch a falling knife or a dart. Like if price is going higher, do not expect to be the one that's going to turn the market around. Let price show you that it wants to turn around before you execute your trade. Don't be a blind mice and, sell just because price got to a level that historically has been resistant from. That's a bunch of nonsense and foolery. All right? I've been trading for, this would be year 3 going to number 4, right? And I was taught this way of supporting resistance, and I would lose each time. I was frustrated. Like, I'll go on the weekly chart, draw my resistance levels, put different colors,
Oh, this is weekly. This is weekly support, like right here. This is weekly support. I maybe turn it orange. Cool, you know. There's another weekly support. This is what I used to do. Oh, here's weekly support right there. Cool. Now I go on the daily, and now I look for levels as daily support and resistance. You know, turn this on maybe green. Point is, by the time I'm done doing all of this nonsense, my chart is filled with a bunch of lines that really don't mean much. You know, like, I mean, you go in the past, you start drawing, like I told you, I can draw a line anywhere and literally will act as support or resistance. Like right here, boom, you know. So, that style of trading doesn't necessarily work. So don't use your support and resistance and enter it blindly as a way to execute a trade. Make sure there's other confirmations, whether it be a breaker structure that you see around those levels. Not just an engulfing candle. That's not enough. I'm telling you, it's not enough. You can get an engulfing candle and then get faked out. Look for different stuff like breaker market structure. Look for the trend direction, right? Also, a better way to look at this is, I'd rather you, instead of, you know, just looking at, because when you're drawing support and resistance, you're drawing lines from, I mean, it could be 5 years ago. I've seen that before where people just look on their monthly chart and draw every level that they see as support / resistance. I mean, you'd be looking at years of data. You know, now the higher the time frame, of course, the stronger the level is. But don't use those. Don't blindly enter trades on those levels without understanding the trade direction, without understanding the trend, without seeing like maybe a breaker market structure in a lower time frame. Right? These are the keys to look for. And I'd rather you focus on the most recent swings in price or most recent breaks of structure. Like, for example, here. Like, stop going all the way in the past. Like, that is so far away. No one cares about that. I just showed you. I can draw a line anywhere, and it will act as support and resistance in the past and in the future. So, focus on the most recent, if anything, if this is your style of trading. Right? We see a level of support right here. Market broke, it came there. You know, break and retest. Sells out, right? Cool. This is another level right here that could have been considered resistance, right? Price goes there. You don't blindly just sell there, but guess what? It breaks above it, comes back down. Maybe you could have taken a buy here. Or maybe when price went higher again, then came back down, you could take a buy here. So I'd rather you focus on the most recent. I'm not saying that's the best way, but if you are going to still be strong-headed and trade with support and resistance only, I'd rather you focus on the most recent swings in price than you looking like 30 years back in price to figure out where you want to put your lines. I can draw a line anywhere on my chart and it'll literally show as support or resistance. So, all that to say, I mean, and another way, these banks, they look at these areas of where traders would logically put their stop losses as levels where they can either execute their trade or exit their trade. So, for example, for me, when I'm trading, when I enter a trade, a logical level where I will exit would be a level where I know. For example, if I enter a trade right here for a buy, for some reason, whatever it was, logically it makes sense for me to get out above this level where I know traders are going to put their stop losses at. Like if they're selling from here, selling, their stop loss more likely reside over here, right? And this could be a 4-hour chart, 1-hour chart, it doesn't matter. I'll exit over here because I know that's where stops will be. That's where the banks will probably look to exit above a level like this because it's obvious that traders will put their stop loss here. So the obvious levels that you see in charts are typically targets for the banks, where they're either going to exit their positions or switch sides. So don't blindly buy or try to catch a falling knife. I mean, I've heard traders just do stuff based off of, like I said, historical price. That's not enough. Know the trend direction. The trend is your friend. And look at the most recent swings in price. That's a better way to look at price. Now, there's other things I'm going to teach you in later lessons on how to execute around these
positions or these support and resistance levels. I don't really use this, but there are ways you could implement it and not have so many lines on your charts. So I hope you got something from that. I hope you got something from that. I mean, if you're confused, just look at your charts and see if it makes sense. Back test your strategy. Like I said, I've been training for going 4 years, and this stuff doesn't work. I'll tell you that. I've been introduced to different things, and this one right here is a very flawed logic in the market. So, like I said, go look at your charts, do some back testing. Don't just listen to whatever book you're reading and try to buy levels of support. You're gonna lose over and over and over again. You try to buy the market here, it's a double bottom. Cool. The market goes right below it, takes you out. There's another double bottom right here, right? You try to buy there, it takes you out, boom. So don't be, stay away from that foolery. Okay, but I just wanted to give that lesson out there. I'm gonna come with way more different things that I know about the market now from my years of experience and from learning from one of the best mentors. So, if not really the best mentor, but he's been my best mentor. So, but anyways, I hope you learned a lot from this, and have a wonderful day. Have a wonderful day. Thank you.